Hey, what's up, everybody? In this video, I figured it makes sense to just spend a little bit of time talking about my buy criteria, if you will, just the things I like to see in a stock before I might pull the trigger. And before I do that, it probably makes sense just to talk about the screening process. And the reality is that the screening process never ends. I'm always screening. That's the job as far as I'm concerned. I call it tracking. I'm not so much screening for a certain criteria all the time. I'm kind of just tracking what's going on, keeping my finger on the pulse of things that are happening, news, fundamental events that are unfolding, general sentiment, those types of things, price action. So I'm always just tracking everything. And then just because then when opportunity presents itself, I'm ready to act. I'm prepared to pounce, if you will. So if I'm tracking everything, then I'm ready to go. So sometimes I'll set aside time to screen, usually when the market's tanking and I need to act quick and I'm looking for a particular type of stock to round out the portfolio. So at that time, I'll screen, but usually I'm just always just tracking stuff, and I'm not really just screening per se. As far as like analyzing the stocks, I got a list of 5 things I jotted down that I look at. If I spent more time on this, the list might be longer than 5. Some of these could even be consolidated into one. They're kind of in order, but there's so much overlap, I don't know. But let's just go through the list. So the first thing is a discount. I'm usually demanding a sizable discount because of the rates of return I'm shooting for. And the discount is often in relation to my crude fundamentals based value, but sometimes it's just based on the chart. But on the fundamental side of things, I'm looking at historical operating performance of up to 20 years if they have that much. And you'll see this in other videos too, where I show the spreadsheets. But I'm slicing and then dicing the numbers a whole bunch of ways. But mostly I'm just focused on a few key things like the balance sheet, revenues, earnings and cash flow, gross and net margins, share count. I feel like those are some of the more important things. And generally speaking, I find Gap reliable enough for my approach. I know it's not perfect. It can be manipulated. I've read it. But usually that risk can be managed in other ways. So, yeah. On the technical side of things, the charts, they usually complement my fundamental analysis. And I've mentioned this elsewhere, but they help me analyze trends and prevailing sentiment. It's really hard to gauge sentiment just by looking at fundamentals. You could probably guess based on how the company's performing, and you'd probably often be right, but to really get a direct assessment of sentiment, that's where the charts come in handy. And I find it's helpful for like timing things, and some of the best opportunities are when the chart looks like shit, right? So that's something to bear in mind. But yeah, it's just important to look at them. And then I lead on them more heavily for stocks that are difficult to value. I know some people might just not even go down that path. It's too difficult to value. It's not for me, but sometimes they'll have other characteristics you really like insider buying. I had a ton of insider buying, but I'm having a tough time valuing it. I'll do my best, and then I'll rely on the chart. I like to keep that universe broad, the universe of stocks that I track. And then, I guess just one final point in the chart. I just find the benefit of a larger and more diverse universe of investment opportunities to be worth the associated cost. Like it outweighs the associated cost of stepping a bit outside my wheelhouse. You know what I mean? So that's just my final take on charts. All right, so number 2, leverage. So I don't shy away from leverage companies. I know some people do, but the way I see it is that that's where some of the best opportunities are. But at the same time, I often don't want to deal with the hassle of bankruptcy, so it's like a balancing act. I'm often investing in leverage companies, but I'm trying to assess them. So I spend a lot of my time assessing credit risk, right? What's the likelihood of this company going bankrupt in the near term? And if not, could it survive and thrive and all that stuff, right? So when I'm analyzing leverage and credit risk and so forth, I'm trying to manage the risk by focusing on a few select things. I just tossed a couple down here, but there's a handful of financial metrics I look at. The yield on its publicly traded debt, if available, I love that. I didn't used to look at that, and now I find it so helpful because those bond folks, they tend to be on the ball with things. So sometimes they make mistakes, but they tend to be on the ball. And so it's just a quick thing you can look at, and it's so insightful to know with that debt, especially if it's trading out a couple of years and you see the prices in the tank, should be a red flag. I still might dabble, but it's a huge thing I look at. Potential covenant breaches, you got to keep your eye on that as best you can. The analysis of ratings agencies, if available, some of them will publish their research and it's available to the public. That's always great to read through. Sometimes I disagree with it, but it's still really helpful to check out. And then also, who owns the debt? It's good to know who owns the debt. Especially if the company might be on the verge of bankruptcy. All right, so number 3, and this is a big one for me. Insider buying. I weight this quite heavily, I've learned, especially during market sell-offs. And what I find is that any insider buying is better than no insider buying. But there's a couple things I love to see in particular, like buying by prominent execs, CEO, chairman of the board, CFO, buying by a large number of insiders. 3 to 4 is good. 5 plus is better. Sometimes you see like 10 plus, and you're like, what the hell is going on? 10 plus, like $1 million, $2 million, $5 million. It's like, what is going on there? I might even buy just based on that, right? Buying of it, I like to see at least 200, 300K. That's good. $500,000 plus is better, right? Some people will look at how much they're buying in relation to their compensation or the size of the company, revenues, or market cap. Those are good ideas. I just find just the general level of it I find that tends to be a good indicator. And then finally, just seeing if the insiders are buying after the stock has sold off when it's potentially cheap, and potentially at an inflection point. If the company is seemingly at an inflection point and they're buying, that could be an indication of something that's unfolding. All right, so number 4, ownership. Generally, higher insider ownership is better. I like to see at least 20%. That's not a strict rule. None of these are strict rules or anything. I invest in companies that aren't leveraged, that don't have insider buying, that don't have insiders above 20%. I like to see at least 20% if possible. But it's not always a good thing. Sometimes you'll check out a company where it's like owned by a family, there's dual classes, they're entrenched. And that can be a thing to look out for. Sometimes it's a good thing. I've come across a couple of companies where it's been well run. The company has clearly been well run and historically successful and profitable. And I like to see it. But it's just something to keep your eye out for. And then insiders aside, I like when respectable like value shops and activist investors, when they own the stock and when they're actively buying. I like company in that regard. If I respect their approach, if I find there's a lot of overlap with the types of stocks we invest in, then I like to see that, right? Because we still might be ultimately wrong, right? That happens all the time. But all else equal, I like to see them investing alongside me. And similarly, I like when knowledgeable analysts on Seeking Alpha and Twitter, I like when they share my views. Now, not all the articles and everything out there are good. I won't get into it here. It's probably worth a separate video talking about all the social media research and analysis that's available to people. But I'll just say there's definitely some knowledgeable folks out there who will write articles, or especially you got to check out the comments too, because some of them probably just don't feel like writing an article, right? I mean, I don't feel like writing an article. I'm too busy performing research. Sometimes they do write articles though, and so but a lot of them will comment. And when you ever come across somebody who seems knowledgeable, if they've written a good article, or if they've made even an insightful comment, sometimes all it takes is 1 or 2 insightful comments, and I can tell that this person is someone to keep an eye on. Just hear what they have to say. Maybe you don't even agree with them, but if they just seem insightful, track them. Remember, it's all about tracking. Just follow what they say. I'm not ashamed to admit how much I lean on the analysis of other folks, other individual investors who publish their research. Some of them are more skilled than me. It's a big part of my process. And again, I'm not ashamed to admit it. You're going to see me doing it in the stream. It's like, I feel like more people should be doing it. It's just, you got to be mindful of who you're following. You don't want to follow people who aren't doing good analysis. And then the final thing is confidence. Like confidence, right? Like all these items feed into my confidence level, right? Like how confident am I in this play? The discount feeds into it. If like there's not much of a discount, then I'd be a little bit, maybe I'm not as confident in it as a position in my portfolio, whether there's insider buying, who owns it, the leverage, like these things all feed into how confident I am in it. And it's a simple introspective question, but I find it's just really helpful for keeping myself honest. And sometimes I'll even force myself to assign a confidence score. You'll see this when I review my spreadsheets. I try to do it. And yeah, it's good for keeping yourself honest. That's all. And it helps me decide whether a stock is a worthwhile buy, like how to size the position and whether it makes sense in the context of the portfolio. It's not always the goal to have high confidence plays. I know for some people it is. Like I only want to invest if I'm like 90% sure plus that it's going to work out. And like, I don't know, that to achieve the rates of return I'm shooting for, I rarely get that confidence. My biggest... So it's just, you got to diversify in that regard, where sometimes you may be in a play that's like a 20 or 30% confidence level, but the payout would be huge, right? But you balance it out with other positions, and it's always in the context of the portfolio. That's why when you do see the positions in the Roaring Kitty model portfolio, you need context. You can't just see a position and think, oh, maybe I should buy this, because there's a lot of nuance there, and confidence plays a big part of this. So I'll probably be talking a lot about that during the streams. But I think that's it for the most part. There's probably more I could mention here, more I should mention here, but I don't even know how long this video is. We'll just keep it there, and I hope to see you on the stream, and thanks for watching.